With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday. I'm Juliette Sarli. We are flying through June and having a look at where the market has finished this 12th day of June. We're down by about a third of 1% there on the CBO 200 after attempting to break more records during the morning session. And profit takers have moved in on the S&P ASX 200 as well, which hit a record yesterday. It looks like it's closing down around 0.2%, 8,577. So falling back through that record high that was reached on Tuesday. And then, of course, yesterday we saw yet another high. Let's get to the thematics of the day, though, because one area that you did see some strong buying was in energy players. Very much an energy boost here. We had oil prices moving quite significantly overnight, up by more than 4%, their highest in more than 2 months. Now, this is after reports the US is preparing to evacuate its Iraqi embassy due to heightened security concerns in the Middle East, and gave a very solid boost to our energy stocks today. Elsewhere, a spending spike, albeit very minimal. We had household spending lift slightly in May after a flat April, according to the CBA Household Spending Index. It saw a 0.5% lift, and that saw the pace of annual growth at 5.2%. Now, CBA analysts say that, or economists, I should say that the data shows that discretionary spending is lifting. So some of these pressures on household budgets, the cost of living pressures, are starting to ease. The strongest gains were motor vehicles, household services, health and recreation. And we are going to be speaking to the CBA Chief Economist Luke Yemen tomorrow on the program around 11:40 a.m. Meanwhile, Oaktree's founder Howard Marks says that while Wall Street's rebound back towards its record high has been somewhat troubling, he says the highs are, quote, lofty, not nutty. And I was at a lunch with Scott Helfstein from Global X ETFs today, and he also was very much on the thought train that US exceptionalism is not over. There is still a lot of money to be made. Meanwhile, Howard Marks saying that his firm, which has about $200 billion US dollars in assets, has seeing better opportunities in credit markets, though, because there's still a lot of uncertainty out there. Let's have a look at some of the sectoral moves today, kicking it off with those energy players. Most of them higher, although you can see Woodside has finished the session pretty flat there at 23.55. The miners really lifted us to those records yesterday, but a pullback today. Fortescue dropping back below $16, BHP off by almost 2%. And of course, the banks. What did Nathan Somasundaram tell me earlier? That he thinks that CBA is sometimes behaving a bit like a meme stock, but it just was slightly lower after pushing towards yet further records today. $181, one ANZ there just in the green, $29.82. Quick look at some of the other stories on our radar. Cochlear downgrading its full year 25 guidance, now expecting underlying net profit between $390 and $400 million. A lot of great conversations on Cochlear today that are going to be on our website soon, including Andrew Dale speaking about it just recently from ECP with our Andrew Gagan. Cochlear shares up 1.3%. Monash IVF, now remember it plunged 28% on Tuesday, today up 8.3%. Michael Knaap resigning as CEO and Managing Director, also leaving the board in the wake of the second embryo mix-up at its Melbourne laboratory in a matter of months. Bioxine up 19%. It upgraded its full year 25 revenue guidance from $25 to $28 million. AGL told the ASX that it is conducting preliminary investigations regarding its 20% stake in green energy developer Tilt Renewables, but it did say it is not speaking specifically about any particular bid for that business yet. And ASX shares up 0.4%, expecting its capital expenditure for the full financial year to be within a narrowed range of $170 to $180 million. Now, heading the other way quite significantly was Cettire, and that was the stock of the day on the call. Grady Wolf from Bell Direct, Howard Coleman from Team Invest weighed in with their thoughts.
while they have a large market share in the luxury market, really good model in the online space, in the drop shipping model as well. This is their second weak quarter. That was their Q3 had a surprise loss and flat sales. So this is a second consecutive quarter of weakness, which is what they're showing right now. And their cash position is weakening as well. So what we want to see is strong cash in a time where sales are going down. You want to see a really good balance sheet. It's not what we're seeing right now.
They said something about that earnings of about $500,000 at this stage. Now, last year they made 9.4 million for the full financial year. So the $500,000 isn't going to get anywhere close to 9.4. So it's certainly not going to look terribly wonderful after it actually reports its final results. So would never have passed our filters and doesn't now.
All right, we are awaiting our guest, Fraser McLeod from Shaw and Partners, but we will just have a quick look at also what we're expecting in terms of what happens tonight. Now, we had that CPI print coming through overnight, which was a little bit, of course, calmed somewhat concerns because it was a little bit tamer than expected. These concerns around tariff-driven price pressures. Traders, of course, are waiting more details on US-China trade talks as well. Tonight, we get the May PPI. So that is, of course, the factory inflation print. Won't move the market or the bond market as much, but another one to watch out for. Also, the weekly unemployment claims coming through. In terms of what we are expecting tomorrow, it is very, very light indeed. We are getting migration data for April coming through. I mentioned that we also are going to be speaking to Luke Yearman from CBA. Okay, let's run through maybe some of the sectors that we've seen in terms of the market action today. We touched on Zip. I noted that there was a broker move coming through on Zip just a little while away from Citi hiking Zip's target price on US growth prospects. And IT stocks, or the IT sector, I should say, rose by an impressive 0.8% today. We talked about the move higher in energy stocks. That was up by about 0.5%, the energy sector. So really edging the local market to a better finish than potentially it would have been had we not had that boost coming through from the energy players. Financial stocks, though, coming under pressure, particularly when we saw a little bit of a drop down from the index leader CBA. Consumer discretionary stocks off by about 1/3%, materials down by 0.2%. And just going through some of the specific moves today, mineral resources was down by about 7%, so quite a hefty drop coming through in that. I will go back to what we were talking about with what Howard Marks said, because I think that's really quite interesting. He is one of those voices that when he speaks, people listen. And he was, of course, speaking the Oaktree founder at the Morgan Stanley conference, I believe, in Sydney. So he said that stock prices, particularly here on Wall Street, are lofty but not nutty. He was speaking from Spain via a webcast. And he did say that Wall Street's rebound back towards its record high is troubling, but as I mentioned, prices lofty but not nutty. All right, speaking of someone who's not nutty, let's welcome to the COB Fraser McLeod from Shaw and Partners. And, you know, speaking of nuts in general, haven't you been at an olive oil farm or something, Fraser? You've been out and about.
Yes, I have indeed recently. It's the Cobram Estates site visit. Always good to get out and find out. Recently, Cobram Estates, had an investor visit, and very interesting. So that's a business that we'll all probably be familiar with. Are you familiar with spending $30 or so on olive oil and thinking, gee, that's quite expensive in comparison to a few years ago? They now dominate the Australian market. I think they've got 80% of the Australian market sewn up, and they've got real scale. So nice to see an Australian business, producing and making lots of money along the way for their shareholders. They tend to outbid the competition on water rights because their margins are very high and on quite an undemanding PE. But yeah, very impressive business. And the trick with these trees is that if you water them, they'll produce 9 times the amount that you would think of when traditionally you're in Greece or Spain and see a few olive trees on the hillside.
All right, I'm not sure I've ever spent that amount of money on olive oil. I must be doing something wrong. I'm not the world's best cook anyway. Fraser, let's talk more broadly about the local market. Denied a record today, as we can see on our strap there, but you know, it's been a pretty good run.
Look, it's been a massive run over the past 8 weeks or so since the April 7th low, and the challenge with the market now is that well, we shouldn't just look at Trump's next Twitter comment saying that everything's going to be just peachy. Our market's now trading on a pretty measly 5% total shareholder return on our figures. That includes capital growth and yield. So effectively trading on next to no growth with next to no earnings growth over the course of the next 12 months in our eyes. That's not to say that there won't be stocks that you should be buying, but just to be aware that market's trading on, say, 18 times forward earnings when traditionally it's traded on 14 times. Banks looking very expensive on, say, 22, 23 times on average, when historically banks would trade on, say, 15 times.
All right, let's talk stock specific. We touched on Cobram there, but in terms of Boss Energy, you're saying that the short position here is finally being reduced.
Yeah, look, Boss is a favourite of ours. We think that the stock has been very cheap. It's been absolutely hammered over the last year. And has been the number one shorted position on the ASX 200, and that certainly tells you something. At one stage, a couple of months ago, Boss was trading on a 26% short. It's now trading on an 18% short, and that's still an awful lot of short interest that's yet to be bought back. But you can tell that the shorters are now starting to buy back the stock. It's probably had its absolute low point, quite unfairly in our eyes. The Honeymoon project is up and running and certainly on track in terms of production. We know for a fact that the fuel buyers are out there around the world chasing down contracts rather than the other way around. So it's a tempting buy for us at this stage.
All right, a tempting buy. What about Magellan Financial? Is that looking positive?
Look, Magellan is probably the ultimate big stock gone wrong. Finally now has got back to levels that it's hard to say that they're expensive. In fact, they certainly are really quite cheap. So they're worth about $1.5 billion, which seems like a large figure. But Magellan in its heyday was a $75 stock, and now it's a $9 stock. So the challenge since COVID has been that they've just been absolutely hammered on outflows. The outflows now look to be stopping. And so they've got the funds under management under control. It's around about the $40 billion figure, which is a good base for them to rebuild on. They're unchallenging in terms of the price that you have to pay for those future earnings. They only trade on about maybe 11 times earnings, and a lot of the peer group ones say a bit higher, say 14. And they've got new fund managers, actual portfolio managers, now have the ability to drive the business forward. So as a turnaround story, finally, Magellan could be one to watch.
All right, now I was at a very interesting presentation today, more about ETFs, but of course uranium, URNM, came up, and I know that you like to talk about uranium and exposure here. Is that still a good play, or should we be looking more as well in terms of some of these sustainability players that need to be used to factor in the data center energy and the like? I know that some of the other ETFs that are out there include some of these AI players and the sustainability linked to it.
I think there's a case to be said for blending on the ASX, and the challenge for Aussie investors is that our uranium exposures here tend to be quite local. They don't tend to get the full weight of money. You see a lot of money go to North American stocks or even North American mining stocks before the re-ratings really happen here. There is a case even. If you look at dedicated uranium funds, they tend to be made up not just of uranium mining stocks now, they tend to be made up of SMR developers, so small modular reactors that will be needed in the future of newer technologies. And also, of course, the data centers or the hyperscalers that are going to be needing to buy the constant base load electricity. So yeah, there's a case for a blending of all. But if you really want some delta, then you really should have some uranium mining stocks that are able to deliver into what could be quite a shortage of the raw commodity over the next couple of years.
All right, Fraser, always a pleasure. Enjoy the rest of your afternoon. Thank you so much. Fraser McLeod from Shaw and Partners. All right, the market has closed. Let's have a look at the leaders and laggards. Genesis Minerals up by an impressive 5.5% today. Clarity Pharma now, of course, it's been hit hard over the last couple of sessions. A bit of buying coming back through there today, and then some other gold and metals players as well being lifted. In terms of the laggards today, it was MinRes down by 7.4%. Domino's also being hit today, down almost 5%. In the small end of town, Dateline Resources up by 27%. Now, Talga, I'm going to see if I'm quick enough to remember what happened to Talga, because I know very early on in the session it had a very big spike, and that was due to a regulatory win for a Sweden graphite mine. Mica Metals also up by 11%. On the laggards there today, of course, Cettire was the stock of the day. We touched on that, down 31%. BetMakers also being sold off today, and Duratec off by 7%. The overall market, though, finishing a little bit lower after yesterday's record, down about 0.25% on the CBO 200. The ASX 200 fell by 1/3%, or 27 points, to 8,565. So it's actually fallen now back below that record that was reached on Tuesday and then broken again yesterday. But still has been a pretty impressive shortened trading week, I should say. And over the past week, so if you put in those 5 trading days, we're up by about 1/3%. So not bad as we head into Friday. Okay, that does it for this edition of the COB. We'll be back bright and early from 9:45 a.m. Eastern tomorrow.